Well, coming into today, the Nasdaq was less than 2% from a bear market. And if levels at the open had held, we would have seen the tech heavy average close there in bear market. However, today's run from those levels is welcome news. But is this enough to justify an extended rally is the question. Here with more, we've got Dan Ives, Wedbush Securities Managing Director. Dan, good to speak with you here this afternoon. Half a session, we know, does not make a trend here, but perhaps the market is reading into the Fed, perhaps delaying the brunt of its tightening. We don't have the firm indication that they would be doing so, but do you believe that that's what tech investors here today are leaning into the ethos of, perhaps?
Yeah, I think, look, the clear read through a 50 bip, hike, that's off the table. And I think now much slower trajectory. Obviously, it's going to be positive in terms of the 10-year yield relative to tech stocks, in terms of the risk off trade. Look, I think fundamentally, I could tell you from conversations last night with investors this morning, just way oversold. I think it's the most oversold I've seen tech stocks in 2015. Because as scary and white knuckle period as this is, if you look at the fundamental driver in cybersecurity, cloud enterprise, that's not changing because of the Ukraine conflict. And I think investors are starting to use periods like this. You go historically, geopolitical black swan events, the last 25 years, there have been more opportunities in those crises and chaos rather than time to sell.
So do you believe that we have hit, at least in tech and some of the big tech, big cap names, mega cap tech names, that we've seen a bottom placed in? Or is there any inclination to believe that there is still more of a downside to come?
Look, there could always be, of course, more downside, more volatile, but I think we are getting to the point where we are way oversold in terms of tech relative to fundamentally. From a PEG perspective, in terms of growth relative to PE, we're going to back to valuations 6 years ago, relative to growth, especially in some of these areas like cloud, cybersecurity, chips. We'd be strong buyers here. Look, it's obviously a nerve-wracking environment. It's buckle the seatbelt period. But when I look at areas on large cap names like Microsoft, Apple, Cisco, Oracle, safety blanket names, look at cybersecurity names like Zscaler, CrowdStrike, Palo Alto. There's going to be many yelling fire in a crowd theater at scary times. But we view, at least over the last 20 years, we've used these opportunities to kind of help investors pick up some of the gems.
And so, Dan, when we think about more broadly here with the international conflict, one of the things that has been on the table and has come up repeatedly in discussion is certainly with regard to semiconductors and whether there would be sanctions, chip-related or chip-directed sanctions, and even towards some of the materials that could also come into play during this particular international conflict that are necessary to make semiconductors. Does that change your reading on any of those manufacturers, whether they be fabrication, model manufacturers, or whether they just be design manufacturers?
Yeah, I think most of the fabs, most of the supply chain, they've been able to diversify pretty good in terms of when we think about any impact here. I do think it's pretty contained, relative to any sort of either sanction or even from a supply chain perspective. Look, I think the irony is supply chain issues are moderating globally as we go into March and April. Now, granted, this is something that, no one expected or in worst nightmares would have wanted to see, but supply chain's moderating. That's huge in terms of a tailwind for tech, which is why, Brad, I believe we look at this period of time here, 6-9 months from now, and this was an opportunity to own software chips rather than time to sell it.
Does that supply chain moderation also impact or alter any of your price targets on some of the tech players, especially reliant on their ability to produce consumer technology products, or for some of them, computers on wheels even?
What's bullish for Apple, because that's been supply chain constrained. It's bullish from a chip perspective, names like AMD and NVIDIA. I think it's bullish for automotive plays like a Ford, GM, and of course, Tesla. Because right now, that's been the biggest overhang in a lot of those EV names in automotive and tech. In terms of the supply chain. And obviously things have changed dramatically the last 24 hours, but in times like this, I think you just have to, look at the fundamental drivers, sort of tune out the noise as hard as it is, because I think that's where you find the opportunities in sort of chaos.
If this were to permeate over into any NATO touching countries, what type of impact do you believe that would have then on how we look at this entire situation, especially for tech companies that do have more of that globalized approach?
Well, I think that's one of those scenarios. Like if we looked at a bell curve scenario and then you start to look more at the worst black swan event, I mean, that's where it gets more negative because from a consumer, from an enterprise supply chain, both from tech to automotive, I mean, that's where you could really start to see that sort of next leg in terms of a sell-off. But that's why I think when you look at the situation right now in Ukraine, I think investors, you're starting to see more and more of that appetite for tech because I think there's a recognition when you start to do stress tests and scenarios. I think tech right here, the risk is clearly there and a lot of bad news baked in. I think it really creates the opportunity, especially some of these names like software, chips, and cybersecurity. That's one that you really circle.
You mentioned Tesla a moment ago. I want to get your reaction to an SEC probe that is looking into Elon Musk and brother Kimball Musk, that coming after some of their sales of shares. Of course, noteworthy here was the time period that those sales took place in relation to the other infamous tweet of a poll nature, I should say, where Elon Musk was asking his Twitter followers how much he should sell, also knowing how much he needed to sell at that point in time as well. With regard to the SEC, this just further signals and further goes into this tenuous relationship that Tesla and Elon Musk have had with the regulatory body. And so what do you expect the SEC to look into? Does it materially impact how investors look at Tesla right now?
Well, I think Musk has created this himself. I mean, from the poll to Twitter, and that continues to be a black cloud over the stock. And it's something, the lack of situational awareness that he's had from a social media perspective in this environment, a risk off, is astounding in a bad way. And I think it's something where, as obviously as they look into this in terms of, for Musk and Tesla, I think it just speaks to a broader issue. You almost have, you have two sets of things happening. First, in terms of the core business, EV demand, transformational growth, everything that's happened in Austin. And that's obviously been extremely positive in the supply chain issues. But then you look at Musk and from a Twitter perspective, and as well as everything, in terms of the selling stock and the poll, it's something that's really left a lot of investors with a bad taste in their mouth for good reason. Look what the stock's done since. So it's just been a very concerning trend that we've seen here. And I think this is just another example, that Musk continues to sort of be, in some ways just an overhang, especially from a social media perspective.
Wedbush Securities Managing Director Dan Ives joining us here this afternoon. Dan, always a pleasure to speak with you. Thanks for joining us.